Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you the stock of the month here for the month of May. We are going to update the dividend tracker as well, and we did buy the new position already, so you'll see it in there and we'll talk about it. And then we will go ahead and update the spreadsheet here at the end, and I'll explain why about the stock and my reasonings behind that, of course. And so we will get right into it here. And so if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So it looks like there's maintenance tonight at 9 p.m. So we will get that get this video done quickly. And so portfolio today closing out at $4,666.82. We were up $11.45. Up 0.25 for the day. For the week here, we are up $66.19, up 1.44%. For the 1 month, we're up $90.29, up 1.97%. For the 3 months, we always have troubles loading the 3 months. I'm not sure why, but here it is. We are up $417.97, up 9.84%. For the 1 year, we are up $721.82, up 18.3%, and the same for all. So we'll go into the first position here, which is Bell Canada. BCE is the ticker symbol, closing out at 59.11. Here's the snapshot of the position here. And again, that is Bell Canada, ticker symbol BCE. Next one is BMO, Bank of Montreal. Ticker symbol is BMO, closing out at 117.84. Pause the video if you want to see the snapshot, and we'll continue to the next one. Next position we have here is Bank of Nova Scotia, ticker symbol BNS, closing out at $79.43. Here's the snapshot. I'm sure everyone can see this information if you look it up, or if you own most of these shares or these positions. But I always like to update everyone. So next one is Loblaws, ticker symbol L, closing out at $70.61. Here is the snapshot of the position in this portfolio. Next one here is Manulife Financial Corporation, ticker symbol MFC, closing out at $25.85. And here's the snapshot of the position there. You will see, we'll go into what I did purchase, which is QCOM, which is Qualcomm. But first we'll go to Royal Bank of Canada, ticker symbol RY, closing out at $120.26. Here is the snapshot of that one. And again, that is Royal Bank of Canada, ticker symbol RY. Next position we have here is TELUS Corporation, ticker symbol T, closing out at $26.29, up 17 cents on the day. Here's the snapshot of the position. And again, that is TELUS Corporation, ticker symbol T. Next position we have here, and not the last, but Toronto Dominion Bank, ticker symbol TD, closing out at $86.10, up 19 cents on the day. And here is the position for that. Just a quick snapshot. And again, that is Toronto Dominion Bank, ticker symbol TD. All right, so let's head over to Qualcomm. Qualcomm Inc., ticker symbol QCOM, closing out at $137.85 USD. Was up $1.85 today, up 1.36%. So we did purchase a share. I'm going to explain why I have purchased a US stock in a Canadian portfolio, because I know a lot of people don't feel right paying that 1.5%. But to give you an idea, because of how the private portfolio works, we only pay an exchange rate, and then there is a trading fee for, consumers or retailers, retail investors, which is typically $6.95. And it might be different with every other trading platform, but this one is $6.95. And so I did the math, I paid $169.98 on this one. That includes, I do believe, the exchange rate and the 1.5%. On top of, what I purchased. And the 1.5% fee that Wealthsimple Trade charges was only about $2.59. I didn't take a screenshot, which I should have, which is totally fine. Now, a lot of people are be like, well, why would you do that? Why would you pay a fee? Because of the nature of how we're building this portfolio, we're doing $100 a week into the tax-free, and we're not buying these big positions. It made more sense to buy it in this portfolio. And this is more of a value play that comes with a dividend. And so it made sense to me. And so, this is the first US stock to buy in this portfolio. Usually, if it was like a bigger position that I'm investing in, I would buy it in the other portfolio. But because of the nature of this portfolio, building it 1 week at a time and one position at a time, and slowly with the funds that we have in the portfolio, that is the reason why. Because the fee was lower, the exchange rate would have been the same, but the 1.5%, the cost of that was $2.50 some cents. Where if we traded on the other platform in the private portfolio, it's $6.95 per trade to retail investors. And so that is the reason why I have purchased a US stock in this Wealthsimple Trade platform, because I know a lot of people don't like to talk about that. And also because long term, I do believe it will reap the benefits of doing that. I have a bigger risk appetite than maybe some other people when it comes to the other factors like exchange rates, fluctuations of the dollars, and long term. This is long term. This is probably forever. And so, the pros of buying it in this portfolio just outweigh the cons for myself in this just specific position. So I will probably be buying more US positions in here, because I'm only buying one, every week or so, depending on how much funds we have in a cash account. And so Qualcomm, now we'll go to why I purchased Qualcomm. So Qualcomm is a company that creates semiconductors, chips, processors of the sort. And I learned a lot about this company just in the recent days here. But I learned a lot about chips and a lot about tech just in the past couple of days here, just researching into the company. It was kind of just a random thought, and away it went. But Qualcomm used to be, used to produce chips for like Apple and things like that. Now Apple creates their own chips, Samsung as well. But the reason I purchased this company is because the technology it has for cellular devices, for licensings, it has a very interesting business model. But the cool thing is, it's a company based in San Diego, and it was incorporated in Delaware. It is a very, very mature company. A competition for this company would be something like NVIDIA, Intel. And as we know, there is a chip shortage around the world. But looking at the balance sheet in this one, Qualcomm, I don't have the balance sheet on hand, but if you want to go look at the 10K on the balance sheet, they are growing their cash on hand quite healthy, very consistently. And there's very minimal debt when it comes to this company when it came to the balance sheet. On the income statement, went through that as well. I really like the numbers. There's growth. Last year was a very big year for these guys. And then, the income statement I just really enjoyed it, and it looked good. It was 1 year that they didn't have, I think it was 2018, very low, but I do believe that was due to some sort of not acquisitions, but some sort of fines or maybe something like that, or maybe it was a big tax thing, but I didn't really look deep into that one. But overall, if we looked past that part, it was a year-over-year growth, steady growth, consistent growth, very mature. The price to earnings on this one right now, if it shows it on here, I don't know if it does, is 19.5. So it does check out. I do believe NVIDIA and Intel are above like 44 or something like crazy like that, which is not bad. But this company has a very interesting business model, which includes royalties for cellular devices. These guys were the head of 3G, 4G as well. And now they're working on 5G technology. I'm sure if you're a tech guy, I'm sure you heard of the Snapdragon. But the cool thing is that this year they actually had a $1.84 billion acquisition with a company called, I do believe it's called Nuvia. And I looked into that, and Nuvia is a company that was started and founded by a few guys from Apple, a few guys from Google, and they are creating. So these are guys that worked on the chipsets for Apple and a lot of their products, but now Apple's, I believe, is doing their own thing with their chips. And so Qualcomm bought Nuvia. Nuvia has this intellectual property of knowledge that is from Apple, and are now making Qualcomm much more competitive. And these guys have clients like Microsoft, Google, anything that typically has to do with cellular devices or even vehicles. You know, this is where chips are purchased from for the most part. I do believe Tesla was in there as well. So a lot of these companies we know about, these are like flavors of the month, very very popular positions for a lot of people, and it's always talked about. But Qualcomm is really cool because it's just mature, pays a pretty good dividend. I do believe it was about over, just a tad close or a bit over of 50% of their profits back to shareholders. They had a heavy buyback program for their shares as well, and so they're purchasing back their stocks. I do believe it was a $30 billion share repurchase program over the next. There's no deadline on it, but they are purchasing them back quite aggressively, which is a great thing if you do hold the shares. Very, very good on the outstanding shares. So I know some of this stuff might not make sense, but I'm just giving you my justification on why I purchased the stock. And I'm definitely making I will be making videos on income statements, balance sheets, and the other one, cash flow statements. So yeah, we will be doing 3 separate videos for each one of those. So it will all make sense eventually. But that is why I bought Qualcomm. They are very mature. They have a healthy financials in their 10K. They did great last quarter, and they're getting competitive with Apple, Samsung, and those guys. And remember, these guys used to provide chips for these guys in their contracts. And if you don't know how Qualcomm's business works, it's pretty impressive, and it's actually really, really interesting. So I know they're going through a lot of like lawsuits and antitrust stuff that's going on, but they seem to come ahead of it. They continue to innovate, and just reading that 10K just really taught me a lot and solidified a lot of decisions with this company. So that is the reason I bought Qualcomm. So that is Qualcomm in a nutshell. They are a semiconductor producer, manufacturer, business to business, not to consumers. So they don't sell to the consumer directly. They sell to businesses like Apple, Microsoft, things like that. So yes, hopefully that makes sense. That was a lot. I totally went on a tangent there. My apologies. There are timestamps in the video, so you can go ahead and skip to the next one. But we will head over to track your dividends, and we got to do this in a very interesting way here. So we had purchased Qualcomm for actually $169.98 Canadian. But if you look on here, it will convert it. So it's not in here, but we will do a new holding. I tested it out just so that before we came on. So you don't have to put TO in this because it's traded on the NASDAQ. One share, currently a cost basis of $169, which is really cool that Wealthsimple Trade shows what you purchased at in Canadian, so that you don't have to do the conversion rate yourself, because conversion rates, exchange rates change all the time. We'll go ahead and add that to the portfolio here. Excuse me. We will close this ad. So Qualcomm, closing out. So that's Canadian. This is what we purchased at. Apparently we already made $2. 1.89% for the dividend yield. We are at 1.91 dividend yield right now per year on Qualcomm is $3.25. We have an annual income of $172. So if we go ahead and switch this to the US, I know the exchange rate might be a little bit off. Just get an idea here. We go to Qualcomm. The closing price is $137.91. And apparently we purchased at $135.98, which is a bit off, but it is what it is. But it is long-term, and so that is why we purchased the stock. And it's just a new position to, of course, to diversify the portfolio as well. So portfolio value coming in at $4,642. profit of $657. Dividend yield currently sits, if you were to build this portfolio today, 3.7%. Our yield on cost is about 4.31%, and our annual income is $172. And so that is the updated tracker here. We'll head back over here. And yeah, so that is the newest position. Of course, now we're looking into diversifying a bit more. I know there's been a lot of comments on why I have so much in financials, why I own so many bank stocks, but that is the nature of the portfolio, the nature of investing sometimes. And if you know the ins and outs of how a business operates, then it just makes sense to me. And my risk appetite may be different than yours, and everyone builds their portfolio differently. And so other than that, guys, hopefully you guys did enjoy the video. And again, we are going to update actually the spreadsheet here. So we'll do this quickly and then I'll get to the end part. So we'll pop up the spreadsheet here. And so as you can see here for the update of 2021, you can see in April, we earned $22.97 in dividends. And the total for the year is $48.93. Now, year-over-year growth for dividends is now at 182%. Our net deposits is now $2,075, thanks to some of the referrals that came in. And anybody who wants to use the referral code gets you $10 and $25 for myself when you make your first $100 purchase. The link is down in the description below and the code. So our total invested now is $3,945. Market value coming in at $4,666.82. And the performance this year, we're at 5.46%, which is not bad. And so, yeah, so that is the spreadsheet real quickly. But yes, hopefully you guys did enjoy the video. And also we are going to be making videos on the income statement, the cash flow statement, and the balance sheet, and how to read those, and what I will, for myself, look for. And again, this is not financial advice. I'm not a financial advisor. I'm definitely not your financial advisor. So if you want to seek professional advice, please do your due diligence. Go find someone that can give you advice legally. This is not advice, just a guy on YouTube. And so, yeah, hopefully you guys have a great weekend. Hope you guys did enjoy the video, and we'll see you in the next one. Bye.